All three, 7-day reverse repo, 1-year loan prime rate, and 5-year, first time since August 2023. That's on the heels of the PBOC surprise move to also trim that 7-day reverse repo for the first time in almost a year.
And it's just perfect timing. Tom Orlik is in town to talk us through this. Bloomberg Economics chief economist here in the studio with us. Tom, it's always good to see you. You guys, your team has a whole report out, right? You mix the rate cuts plus what we heard from the plenum. No big bang stimulus, though, for markets.
So, Yvonne, when you said it's perfect timing, I thought you were going to say it's perfect timing to coincide with the third plenum. But thank you for elevating my arrival in Hong Kong to such an elevated status. But I think you're right. I mean, the third plenum, did it deliver the kind of game-changing reforms that we saw in 1978 from Deng Xiaoping, or even 2013 when Xi Jinping first came in and delivered that big commitment to pro-market reforms? No. But there were some modest moves in the right direction on financing for local governments, on support for the private sector, on driving technology forwards. And then, hard on the heels of that, we have this 10 basis point cut from the PBOC. Now, we've been calling for a PBOC rate cut for a long time. It's clear the economy needs it. Real estate is in free fall. Consumer prices are near zero in terms of the year-on-year change. The PBOC haven't delivered until now, and it's coming. So what we have is we have the reform commitment from the third plenum. We have the PBOC giving a little bit of additional support earlier than expected to the economy. So something on reform, something on stimulus. It's certainly not a big bang. I think we can say it's a little bang.
Yeah, a bang nonetheless. A bang is better than no bang, isn't it? What are your thoughts? A lot of the guests we talk to here bring up fiscal stimulus needs to pick up, more of the burden here, and unlocking fiscal capacity. What do you make of this new revenue sharing as part of the reform package that they talked about? That local governments do need the help of central governments, and it looks like they're headed in that direction.
So China's got a serious problem here, David. Can monetary policy provide some additional support? Yes, and so it's good news the PBOC has delivered this 10 basis point rate cut. Can monetary policy do it on its own? No. Debt is too high, and that means that even when you cut rates, you're not going to have that significant stimulus impact. So what does China need? Well, it needs fiscal policy to step up. But here's the second problem. Fiscal policy, very often delivered by local governments. Local governments get their money from land sales, and land sales are getting crushed by the collapse of the real estate sector. So I think one of the significant things we saw coming from this third plenum decision was a commitment, not kind of the concrete details, but a commitment to fix some of those financing problems for local governments. Perhaps allow them to collect more funds through a consumption tax, for example. Now, if you put those pieces together, what you have is PBOC doing a little bit more on the monetary side and a commitment on the fiscal side, which could free up funds for local governments to do a little bit more. And that means we could be having some of that delayed fiscal stimulus coming through as well in the months ahead.